All right, let's get started here. We'll talk a little market, and then we'll go into some of the things we look at every Tuesday. Jesus Christ, this is gonna annoy the crap out of me. These charts. I guess I gotta deal with it. All right, cool. Just to get those of you who are members caught up with what's been going on recently here. We had the day before yesterday, we had enough of selling where we got enough things on the tactical side lighting up green. In other words, we should see one of those snapback sentiment squeezes, as we like to call them. And we did. We had a gap up off the open. Players weren't really interested in that, sweepers, in other words. And then we got a nice fade. The NASDAQ held strong through most of the day, though. But we got some selling in the Dow, in the S&P. You could see here, even by the daily bar, we gapped up and retraced that. And then they bought that, right? And sentiment was favorable enough where it lit the match and created quite a powerful squeeze like we're accustomed to seeing. All right. Today is a new day. We came in with the majority of those signals more in a neutral stance, obviously, because of the magnitude of the squeeze we saw the day prior. And going into the close today, we're likely going to get the majority of them flashing bullish into tomorrow. Going into the close, we didn't quite have it, but with size mock and some selling out there, we'll probably get it. All right, so what's that mean? I posted, especially for those who haven't been as familiar, haven't been around these webinars or a member for long. All right, this is the general playbook. When we get, tactical bullish sentiment signals looking for a squeeze, right? If we see some intraday signals, we didn't get that, believe it or not, today for some reason. We got it the other day. We didn't get it. We'll probably, like I said, get it in, into the update off the close. But when you do get that intraday bullish signal, you want to see some buying into that. You don't want to just jump into aggressive put sweeper activity, okay? Because again, the intraday sentiment they can blow right through that if they're selling. So if you see some bullish activity where players are positioning for a squeeze, some signs of positioning for a squeeze, you play for that intraday squeeze, right? The risk reward should be worth it because you have players leaning too far on the bearish end. Okay, that's intraday, right? We're looking off intraday signals there. End of day short-term sentiment, we're going to get that update in a little bit, and that's likely going to flash bullish. All right, so the playbook of that is we come into tomorrow and anything in the vicinity of this neighborhood of where we close today, okay, if we gap up 60 handles, you don't want to chase that, obviously, but anything here or preferably even further weakness would be ideal. You want to look for an entry for that snapback squeeze, okay? The timing of that obviously is always not the easiest part. A lot of us use sweeper activity as a guide, okay? You can piece in, right? You can piece in throughout the day if there's weakness, if that's something you're comfortable doing. The general thesis behind it is that even if you are a bit early and you have to sit underwater, the probability of a pretty strong snapback squeeze will arrive and get you green, okay? So that's the thinking behind it all. Now, there are times, right? And I know a lot of you probably get annoyed when I bring it up all the time, but you always hear the good, you never hear the bad. There is that one time out of 10 instances where the market doesn't find buyers around these areas, right? You could have a buyer strike, low liquidity, whatever the case may be. COVID, when the COVID crash that we had a year ago, whenever that was, where you blow through some of these more tactical sentiment signals. Okay. And even though that's going to cost you money on a trade that one time, right? Over the long haul, you're going to have a lot more profitable trades than a losing trade. But that one losing trade has a lot of critical intel in it. And the intel is if those signals do fail, there's something larger at play. Okay, meaning, could be something going on in the credit markets, right? It's something the market is trying to factor in, and it's ignoring some of the short-term positioning out there. All right, and at that point, the only thing I look to do, okay, so an example would be if we, let's say, barely squeeze tomorrow and there's some heavy selling and we just go south, okay, and blow through those signals. At that point, I'm not just adding into this. That right there tells me immediately the next plan for me is to wait on the bigger picture signals that we follow, right? And that's more on the positioning side, Sharpie riffraff, the whole 9 yards. Those are the signals you get once a year, once every 2 years. In this bull market, may never, So if that does fail, there's good and bad. You will have a losing trade. And for those of you who've been around, you should be okay with it, because again, if you've been playing off these tactical signals, they've been, knocking the cover off the ball for quite a while in this bull market. So you'll have a losing ticket there, but more than likely you're going to set up something a lot better with some longevity to it, right? Not just a snapback squeeze, possibly the start of a new leg higher, right? With new leadership, because that's the washout a lot of us want. And sometimes we could get our cake and eat it too. Okay. And what I mean by that, I'll give you an example. Back in 2018, okay, you could have traded the tactical signals profitably over the short term. Okay. In other words, we would get tactical signals, we get a squeeze. If you took that squeeze off the table, you had a good 3-4 trades in that correction. The final bull signal failed and then ultimately nailed the bottom into Christmas Day. Okay. So, if you played all those tactical signals, you would have been 3-1 win to loss, right? And you would have had a great setup when it was all said and done. So the one thing I definitely want to stress is, even if you lose money off one of these signals, you can't just, put your head between your legs and not pay attention to what's going on, because one, it could be telling you something really important in the market where you should probably be sitting on your hands. And two, pay attention to the more important stuff out there that nails bottoms, nails lows. Okay. So it's good to talk about this stuff ahead of time, because in the heat of the moment, we all can't see clearly because there's a lot of noise around, and you get easily distracted and scared away from these things. So it's good to talk about this stuff early on. All right. On a side note, I don't want to talk about the COVID variant too much. Like I mentioned Sunday, we all don't have a clue. Let's not pretend we have a clue. Okay. Even the people who are supposed to have a clue don't have a clue. But you got some really interesting things going on here, because it's getting blamed on this COVID variant, but something we've been talking about for a while. Even as the indices have been doing their thing, even as an AMD and a Roblox and an Apple look good, underneath the hood, okay, if you look at equities as a whole, they've been telling you that there's something not right, because anything economically sensitive has been an effing disaster. At best, even when they're in play, they barely can muster a rally. Like best case scenario out of a lot of these economically sensitive names, you get sideways action. you know? So anything that has had to rely on the global economy has really, been underperforming for a while. All right. And you guys know that if whoever was around for 2018, that's why a lot of us have been talking about 2018, because it resembles it. You know what I mean? Again, not the price action necessarily, but just, the unhealthiness of the rally and just the reluctance of players to get behind anything that is tied to the global economy. And what's strange about that is you hear how well the economy's doing, right? And so lo and behold, what you had this morning, right? And you think about what's come into this holiday season now, right? Without a doubt, we were talking about, you had the potential for a melt-up, especially in names that have been red hot, the AMDs and all that, Roblox, right? They're still holding up, the majority of them. But you really had the potential for a melt-up into early next year, and then we'd see that correction, okay? And that could still be the case. We could reverse from here, go to new highs, melt up into next year, and I think we get that correction January, February, whenever it may be. One or the other, in my opinion, is going to happen. Either we're going to get it now on low liquidity. It's certainly possible now. A couple of weeks ago, it didn't look possible, right? But that's the beauty of the market. Why is it possible now? You have not only this variant that gets into the mix, okay, to scare some of that dip buying away, but now you have all of a sudden Mr. Powell, a la 2018, trying to take a hawkish stance into potentially what the market's telling us is slow growth, right? And that's what did it in 2018, okay? Powell was stubborn. He wanted to tighten. He wanted to raise rates. The market was telling him, listen, it's no good. The economy is not as strong as you think with these trade wars and everything else. He did it. The market made him pay the price, and then he pivoted into Christmas, and that was all she wrote. Okay. So again, there's similarities there. But what's really similar is you have that low liquidity seasonality effect, right? Where if players really want to get out of risk assets, you don't need a lot of selling if there's a buyer strike. You understand? And that can get things like, you see the market behavior, especially on that half a day, right? It was all machines. It looked like all machines. So when you're around the holidays and you get that low volume, low liquidity, things can get slippery quick. Okay. But ultimately that, in all the likelihood, it sets up a real nice entry for something bigger. And we've all been waiting around for it. Again, I don't want to get my hopes up. I still don't think it's coming now. I think it's more probably early next year. But you got a couple of catalysts that can help it out here where we didn't have it in the mix. All right. So here's the thing. Okay. And I know a lot of you feel the same way. It's been really frustrating for me, right? Trying to position and anything on the swing side, right? And what I mean by swing side, I'm talking about something I want to build a position in. I don't want to get shaken out on the first sign of weakness. I want to give it a little bit of room. I have high conviction. I want to be able to add if they give me a little bit of weakness over the short term when I have time on my calls. That's what I consider swing positions. The stuff that I'm going to be tactical on and a lot quicker and more disciplined on is stuff that I don't have as much conviction in. And I'm looking to play off the momentum of both the flow and the market. Okay. But for me, I just can't get to the point where I can, no matter where these stocks are, right? We were talking about this Sunday. You have stocks that look like we've been in a crash. I mean, it's unbelievable, some of these charts. And like we were talking about Sunday, they're decent spots, right? It's not like you're chasing, right? You're getting stocks that are, 60% off their highs and can't catch a bid. But the problem I still face is that if the overall market, which is not like that, and is crowded in specific areas, if they roll over, what's going to happen to those things? Are they going to buck the trend and go higher? It's highly unlikely. Okay. Maybe they go down less, possible, but is that something really you're going to have some high conviction and lean into right now? It's just, right, or bankrupt. Some of these things look like they're going bankrupt, John. I mean, that's how bad they look. Some of these things look awful. Look awful. Yeah, and today, exactly, C-Train told it all, right? Like, I don't even know what went on. Is there something cooking in Apple? I mean, do they have an investors day coming up or some shit like that? Like, they literally were piling into Apple today. That's it. And that doesn't last. Okay. It can last longer than we would like, but it's not going to last long. So for those of you who Apple vaccine, that's what it looked like. That's what it looked like. All right. But this is crowding. Okay. And this is what they've been doing in this market. And they've been doing a great job of it, holding up the indices. But they find, the few names they can hide while everything looks like shit. But eventually that batch of names gets less and less and less. And now, today it looked like one name. And then eventually, the music stops and everything goes down. Okay. But that's a good sign that we're closer to the end when that starts to happen rather than the beginning, like most people out there will get you to think. Usually. All right. So that's, and you don't want, it's very easy to fall into the trap and chase these names. Okay. You don't want to do that because when the music does stop, you're going to get mangled. Now, don't get me wrong. If you're trading, and like we said, that T word tactically, you want to be all over these names. Okay. This is where you're going to make the money because you're not going to make the money in a Roku and PayPal that are bleeding out, right? Or the ARC names that are bleeding out, or Las Vegas Sands that looks like it's going into another 2008 phase, back to $2, right? These casinos. I mean, my goodness, you have to, when you're playing off momentum, you have to go where the momentum's at. You can't go to a place that doesn't have momentum in this type of market because you'd be talking to yourself. What we want to do when the time comes, and again, when the indices get a kick in the teeth, that's probably when the time's going to come. We want to look to these names that are getting destroyed already as opportunities after the indices and the strong names roll over, and we start to see some real flow come into these things. Because again, the market pull will be behind us. Right? They got the generals, the leaders, they're the last to fall. And then they'll start looking for opportunities and names that have already sold off. So that's the good part about it. But for the way the style we're playing right now, we want to look towards these names, especially off pullbacks, weakness, little breathers, and sell them into the rips. We want to sell them into the rips. Again, I'm not talking about investments. You're holding on to Apple for the past 10 years. Okay. I'm talking about trades here, right? And a lot of you play options. We're talking about trades. So we want to look towards the momentum and we want to try to take advantage of the momentum while it's still around. All right. Anybody have any questions, especially those who are members? I mean, the flow, there was a top bet list out there today. There were a couple of decent bets. I can't get myself to buy them. Like Seaworld caught a nice $1 million sweep. And, there's been flow in Seaworld. Doesn't look bad. But again, if you do get a little diciness in the markets, I mean, you got a little pullback, but this thing's been strong. So it's a tough call for me. It's a tough call, but it's a decent looking stock, caught a nice bet. It's not really a tactical trade. I think there were March calls, right? March. So you could definitely see a bounce in it, right? Without a doubt. All right, so I guess it's what you're looking for, but a nice looking sweep. There were a couple other names that caught sweeper activity today, half decent. I'm trying to think off the top of my head. Oh, there was one, it's interesting because I made the comment that that order was the type of order that would get the attention normally of people who are following flow closely like I am, but it was so well timed with the Powell pivot today, right? Did you guys see that? I mean, that was crazy. So who knows? I mean, was he playing that? Right? Did he have the transcript? What do you have? But this is what people are talking about. Hang on. So here you go. All right, so somebody comes in today, and listen, we see put buying all day long, right? A lot of isolated orders, ETFs. Yeah, they come and go, weeklies. This one definitely stood out. One, you had some decent time there. Two, he opened a position all by himself. And three, he dished out 12 million just off this order. There was some more action to come in around it. But this is a big boy. Again, could just be protective, right? But as far as players reacting off it, seeing it, and becoming concerned, you're going to see momentum a lot of times when you see that type of action. So that's what this was all about here. As far as what he's trying to do out in June, God only knows. Nobody knows. You know what I mean? Nobody knows. One day of SPY put action could be a hedge fund who's loaded names and needed SPY protection. So it's tough to really get a read on that. Now we see some consistency of this type of action coming in. You know what I mean? That's a different story. But one day of it, you really don't want to make too much out of it, right? How many bullish bets did we see like that throughout the rally? So, when you're in a bull market like this, you don't want to make too much out of it. Again, intraday momentum, you look for it maybe to create some downward pressure if you're looking to take advantage of it. And that's the extent of it, guys. I'm being honest. The lack of buying or call buying in individual names or the put sweeper activity in individual names, for me, tells me a lot more. It tells me a lot more than this ETF action. There's so much hedging going on. There's so much hedging going on. All right, what else we got that you were talking about? Oh, gamma. SPX gamma that was all pretty much flat coming in. So you got that negative. So that tells us volatility's here, not going anywhere. Okay. SPY GEX, which we look towards negative gamma as a potential turning point, we probably are there off today's action. So that will line up with, again, the shorter term tactical signals that look for that squeeze, that snapback squeeze. And if it does arrive, it should be a powerful one. Okay, that's what the gamma tells us. Now, gamma in itself is not a bullish signal, as you guys know. It can also work in bearish fashion, as we saw off COVID, right? Boom, selling, negative gamma, buyers hide under their desk because you have a plague out there, and that negative gamma feeds off itself. And did we just talk about that? Let me tell you something. We've seen gamma work to the upside. We've seen periods here and there with COVID when it works to the downside. In my opinion, we haven't seen the real bearish view out of negative gamma and options in general. We've seen how the option market has assisted this market on the way up. Yeah, 2018, but I feel like now, Ani, compared to 2018 in regards to the options, is like apples and oranges. It's out of control right now. If you get the type of velocity of the put activity out there, like anywhere remotely close to what we've been seeing off the call activity, forget it. Forget it. And the machines too. So that's what I think that's what a lot of people are concerned about. I think that's everybody's, that especially like myself, the biggest fear out there, especially around this time of year, is if you get buyers take a step back and say, listen, let's chill out here. Things don't look as good anymore. And you get the downside and some bearish players start to snowball things, you can get things wiped out in a hurry. Yeah. And that, that's one thing that really scares me is that, people aren't afraid to buy the dip, right? We talk about how, without a doubt, everybody's not all in. Okay. It's, in my opinion, not even close. There's a lot of fear out there for good reason. You have that wall of worry, but in times of past, that doesn't prevent corrections. And you still have people that think they could just buy the dip and get away with it. And there's going to be that one time where they get lit up. And it's not going to be the end of the market. It's not going to be the end of civilization as we know it. It's going to be an unbelievable buying opportunity, unbelievable. See, right now, think about this. We've had a really long stretch of oversold tactical sentiment signals. All of that stuff has been working to a T. You know what I mean? It's been flawless for as long as this stretch as I've ever seen in my career. And I'm telling you from experience, it's the inevitable. There's going to be one time, okay, at the end of this, where they fail. And I don't think players are prepared for that. And they have no choice. They're going to get lit up. You know what I mean? They're going to get lit up. If you're not prepared for that signal failing, you're going to get lit up. If you play knowing that, listen, these signals have been incredible, and eventually one of them are going to go down at the end, then you can't get hurt. You give back some money, it's a losing trade, and that's it. Right? And that's basically the frame of mind we should all have right now. Okay, to think that, I've seen the fear greed indicator, right, which we were looking at, literally go to 0 and sit there, and I've seen it go to 100 and sit there. It's rare, right? It doesn't happen often, right? It's very rare, but it happens. But people think for some reason it's not going to happen to them. And it's almost like this market needs that. No, it needs those hands to get burnt. It needs it. Yeah, this has been really mild. But what's crazy, Dan? It's been a mild correction, and you see how much damage it does to sentiment over a short time span. So that's why I think the best, well, we would want anyway. We don't want something drawn out. That's the worst. You want something violent, quick, let it happen in the span of a month. Who gives a shit? Whatever's going to happen, happens. And then boom, we're refreshed. And by that time, people will be so scared shitless to buy stocks. It'd be a beautiful thing. It's the patience waiting around for that is not easy. We've been talking about, I know I've been waiting on this for a while, and then, a lot of times it can take a while. Yeah, they're not going to be around. Well said, Cash. They're not going to be around. They're filling their oats. They're making money now, and that's all fine and dandy. But that one time that does occur, what we're talking about, the Hadouken, exactly. Remember that? It's been a long time since the Hadouken. The one time the Hadouken comes around again, it's gonna be a nice reset. All right. So in the meantime, what we do is we play, because if you wait on the sidelines, I'm telling you from experience, if you wait on the sidelines, if you can wait on the sidelines, that's great if you have that discipline, because you're going to have a nice hit ratio, win ratio, and less stress. Okay. But if you're a degenerate like myself and many others here, there's still opportunities out there to play. And you just want to understand that that's the risk. That's what we're concerned about. You understand? That's what you're concerned about. Not the losing trade, about getting caught with a basket here, even off some bullish signals and being wiped out. And the worst thing, not having any ammo when the sweet spot comes around, right? That's the worst thing. Okay, you're holding on to stuff that's been beaten up, and you can't take advantage of that sweet spot where nobody else wants to buy, and your risk reward is the greatest, and your downside is, the least at what we've seen in a while. Quickly, let's look at a couple things. Even though today you had some selling. Here's the update again. Now, we look at these guys thinking, oh, well, they've been cautious and they've been making, I guess they made the right move, right? Well, not really, because a lot of these clients have been moving to inflationary high rate type instruments, right? They tips, REITs. Didn't they load up on REITs? Was that last Friday? Remember REITs were at the top? So they're getting mangled too. They're getting mangled. All right. And believe it or not, the tech, which they've been selling in droves, has been holding up the best. Oh, and you had more of it this week. This was the weekly update that came out late last night, this morning. All right. And they continue to sell. What's interesting as well is that buybacks, there hasn't been a pickup in buybacks yet. Right. That's usually been the big support in these markets. So something to keep an eye on. I don't know if it's the holidays. Could it be the holidays, the reason why? But, because usually it's earnings season when they slow down. Maybe they just think, they lower prices is what they want to wait for, these buybacks. Okay, but you have selling across the board. Tech-led selling. Energy saw some buying, so they bought the dip in energy. They're feeling some pain there now. All right, but big picture wise, energy is not crowded, but they bought the dip recently. What else we got? Here's the players now, if you want to see, which is interesting. All right, so you had ETFs. They continue to see the inflow. Individual names is what they're selling, proper English. Hedge funds, they're doing the majority of the selling, and they're selling tech. And they wanted nothing to do with tech for a long time now. All right, so you see here, look, here's buybacks. Those are the only ones doing any buying. Institutions were starting to do a little buying. They hit the brakes last week. Retail selling and hedge fund selling too. Let's see. Is this the same one? Oh, there's only one there. That's why. Hold on. Here are ETFs, right? And a lot of times you'll see different looks from individual names and ETFs. ETFs, there's been buying forever, money coming into ETFs, some more buying this week. But this is what I'm paying attention to here. So you have the light blue is this week. They bought healthcare, banks, commercial services, and a little bit of tech, a little bit. But look at the 4-week. Look at tech. See that? That's a 4-week average. Crazy. You know, they've been scared out of all these tech names because of inflation and rates. This is kind of a heat map of Z-scores. And what's this? Is this what I was looking at? Oh, and here's equity flows compared to ETF flows. So you see the turquoise ETFs. Look at this. Now that's cause of what do they call it? Passive funds. What do they call it? I'm looking for the proper terminology. Right. So money just comes in on its own. They pour it into ETFs. But as far as here's the thing, like if we were into some exuberant phase in the market, okay, granted, I give you NFTs, all that shit, without a doubt. I'm talking about equities. I don't think we'd be seeing this, guys. Yeah, so like you have the passive flows that come in that get parked in ETFs, but you know when it comes to stock picking, they're not doing much of it at all. And here is a breakdown of different sectors. Look, energy has seen an increase in buying from 2018. It's a pretty cool look. Let's start looking at this. Where's tech? Tech is on the other page, I think. Hold on. Tech's up here. So see here, look. Like tech has been, you know, one of the places they always get excited about. You know, but not recently. All right, so big picture wise, with this stuff, big picture wise, I think we still have more to play. All right, but this market is psychotic anyway. You see what's going on now, okay? And why we want a correction. Look what's going on now. Even if I was to tell you, let's say we'll grind up from here into year end, okay? Without playing the indices, what the hell would you play and have confidence in? Like, what would you play? Okay, you would play, so you would chase the winners and up here and just think they continue higher, right? But there's risk, isn't there? If rates continue higher and they rotate into stuff that's been under-owned and sell those, you got a lot of risk there. There's nothing, you know, even if you felt like here, okay, the market washed out, we got some risk washed out, which we did. Well, there's no doubt about that this wash, that heat we were talking about got rinsed. No doubt about it. All right. But without a legitimate correction, okay, there's still, you don't have that cleansing that you need to, hold on. I can't type and think at the same time, so I'll screw this up. See this? Look at this. Risk appetite, drained. You know, drained. So they definitely rinsed out a lot of the heat that we were seeing on a short-term basis. You know, or on a short-term basis. Here's the other thing we look at, cash that you were asking me about. This is the updated one? No, this is not the updated one. Here it is. You know, so it's not crazy heat out there, but this market is so screwed up right now because of the lack of a correction. I kid you not. That's the reason that there's nothing healthy. There's nothing healthy, right? Seaworld, okay, catches $1 million sweep, right? If I felt like we washed out enough risk in the market, I get $1 million sweep in Seaworld. I wouldn't even think about playing that. But very easily, we can rally, and these type of names don't do, excuse my French, shit, right? Is that far-fetched to think that? Right? Very easily. These names, because of COVID, could lag significantly. You know, you buy what? A PayPal because it's sold off so much? Look at this thing. This thing's running through oversold buy signals like their business got flushed down the toilet bowl. Yes, as TNE, I saw that, but we're talking about PayPal here. You know what I mean? If you told me the market and tech and the NASDAQ was going to rally, PayPal's one of the names on top of my list I would like to buy. You know? Twitter, that's another shit show. There are names that are in a full-blown crash, and I'm not even exaggerating. I'm not even exaggerating. So you could get a market that elevates, rallies, and you could get possibly money come into these names and come out of all the names that you guys mentioned that look incredible. Some profit taking there. That would be totally normal, right? The Costco's like Dan's talking about. Look at this. I mean, Jesus Christ. But what's scary is, this is what kind of scares me here, is that they won't take profit in names like this to buy a PayPal at a discount. You know what I mean? Or any of these names that have been mangled, that haven't done a thing and are under owned and everything else. Like, why? You know, why? So that's my problem. And most of you know it. Like Matt and I talk about this, right, Matt? We talk about this every day. But this is my problem with trying to build positions in anything. I can like a name this week, and then next week I can have a laundry list of reasons of why I shouldn't be in it. Right? That's basically the market we're in. That's basically the market we're in. Oh, GitLab, I haven't looked at that. Did it? Let's see. Oh my God, I didn't even see that. Wow. So wasn't that, this is a perfect example, okay? When we played it here, right? Like these were the names. It felt like yesterday, these were the names to be in. They were unconscious. So if I asked this question 2 weeks ago, we would have all said, you know, these were the names to play. And, you know, now look at some of these names. Didn't snow report today? Or is that tomorrow? Yeah, that's the thing. When the momentum comes out, but Ani, doesn't it seem like that with everything now? It seems like that with everything. You know, it seems like that with everything right now. Yeah, I saw ZS. It was up a little bit, right? Yep. It's a good name, ZS. But yeah, this thing's been running like crazy. Been running like crazy. Hilton, that's another reopening play, caught some action. And it looks good, Hilton. It looks good here. The only problem is you might be stuck in here for a while. And if shit hits the fan, it could roll over. I mean, it's a reopening play. If you have an uprising in COVID again, that's going to affect economic growth. You could definitely see this thing roll over. No doubt about it. So there's risk. Don't get me wrong. There's risk every time we buy something. Okay. But there's a lot more risk these days because of the lack of a correction. You understand? There's a lot more risk. Yeah. MQ, this thing hasn't done a thing either, right? Nothing. Look at this. Now, George, you wanna buy it, and you don't mind being underwater, and you are okay with being early. That's fine. But I'm going back to the question I asked myself earlier. I was asking you guys that I ask myself every day before I even think about swing trading anything. If the market rolls over and we see a correction, which is inevitable, okay, it's going to happen. What is a name like MQ going to do? Okay, is MQ for some reason just going to do this while the market corrects? You know, if you think that, then you buy it. For me, I think logically, best case scenario, it probably, will form a bottom here if the market corrects and outperform. Worst case scenario, you see, like we see with all these other names, this thing just melts away. Just melts away. We see it all the time. Look, okay. This thing turned into now the best thing since sliced bread. You guys remember when this thing was out of favor and this group was done? Right? Try to buy dips in this thing. So that's the problem, guys. That's the problem. Okay. The easy answer, okay, if you want the easy answer, is to stay disciplined, be patient, and put your trader cap on and trade. Okay, trade, right? We got bullish. We should have bullish sentiment signals more than likely going into tomorrow. The market's at this level or better tomorrow. Find something to buy for a trade. Okay, don't go nuts. Don't load the boat. Don't start legging into things. Find something to buy and you catch the squeeze, the rip, you sell it. You know what I mean? That's the game right now. If you want to be conservative, still participate and try to make some money. Yeah, quick hit and runs and, stay disciplined. Don't ride things down, right? You're wrong, admit you're wrong. Don't be afraid of taking a loser here. It's not the time to have that conviction, in my opinion. It's not there to have that conviction. Yeah, win more than you lose, and that's it, right? You like an MQ like George likes, take a shot at MQ. She starts bleeding out, rolling over, get the hell out of it, right? Get the hell out of it. All right, that's the way to approach it, in my opinion. Okay, until we start to see some more constructive signs out there. It's either going to come through a correction where we get high correlation, everything goes down together. Okay, that would be a great sign. Okay, there's no apple to hide in. Everything sells. That would be a very promising sign. Okay, so until we see that, or we see some more constructive behavior out there and flow out there where there's other things besides Apple, AMD, Roblox that they keep piling into. But for me, I need to see the market refresh a bit. I need to see the market refresh. For me to have conviction, I need to see, well, that looks decent. Look at this. Got stuck up here, huh? Look at Build-A-Bear, solid as a rock. John, that would be a good thing. Because you know why? All kidding aside, including myself, everybody was looking Meltup, right? Because all the signs were there. And players who aren't paying attention to the risk, like we're talking about, get stuck. They puke up. It creates an overshoot because of the light volume out there. And bingo, you get what you want just based off low liquidity. Yeah, you get that quick. What we don't want is a sustained stretched. Like you guys don't even know what that is, a lot of you. We would have to sit through corrections 4 months sometimes. 4 months. Where you have to be extremely tactical. Like the game plan right now, for 4 months, you couldn't think about swing trading. It was a losing proposition 4 or 5 months. All kidding aside, you guys don't even, it's not even that long ago, but this thing has been running for, so, you know, this market has been so strong, rigged, mind you, for so long. Yeah. And the speed of the market too. You're right. The speed of the market. That's my reasoning for not shorting, Ani. You know, understand? I can still play tactically. And for me, I think I fare better on the long side tactically than on the short side tactically. You understand? So that's me being more conservative rather than going into all cash, which I do too as well when I can't play tactically, you know? Yeah, I can't blame them though, Matt. You know, I can't blame them. But trust me, I'm not even talking about the end of a bull market. I'm just talking about a correction. You know, just talking about correction. Before the 99 run, there was a correction in 98 that, my God, what a beating. Because players were caught off guard a bit, you know? So, like you guys said, it's just the velocity behind it. It's just the velocity. You know, but as far as the end game, the music stopping for good, I don't see it. I just don't see it. You know, I could be wrong. It could be this COVID is, God forbid, a deadly disease that turns us all into zombies, right? You don't need all-in positioning for a bear market at that point. You understand? Positioning is only going to take you so far. Yeah, we're going to have to stick needles in our rear ends, looks like, for the rest of our lives to survive. All right, but honestly, guys, I wish I can, you guys know, I would love to say, listen, there's enough bears out there, block out the noise. Let's start looking for things to buy, piecing into things, build a bit. I can't do that. I can't do that right now off, a little selling like this. All right. We get a little more selling. We get Sharpies start moving around. We get some of the real money taking risk. Then we can say, all right, you know what? The risk reward, downside doesn't look too bad. Yeah, hedge funds, again, we don't have a bullish signal yet, but we may get it off hedge funds. We may get it. Okay, and that would be one of the main pillars. What do I do? To finding a low, at least over even the intermediate term. Right. So we have this here. So they're kind of just like in la la land right now for the holidays, and they have minimal exposure. Okay, a bullish signal, you want to see them puke. You want to see this. You want to see this. Oh, back here, actually, you can't even see it. You want to see them puke it up. And then we'll have a period where we can work off a bottom. We can work off a bottom. So hedge funds aren't there yet. It's favorable. They aren't all in long by no means, but we don't have a bullish signal. We may get one. And, like we spoke about, sector sentiment's just not there yet. We had this, the last pullback, which was a beautiful thing. We don't have it yet. So we're here. We've improved. Okay. But, the stuff that's held up well, they could still hide in. They could still hide in. Yeah, and they've cooled off, Matt. It's not as hot as it's been, right? A lot of the stuff cooled off, but as a whole, it's not there yet. Now, look, you're getting close here, right? On some of these things that have been selling the most here. So, you're getting close, but for me, we gotta try to be patient, Matt. You be patient. Now, listen, what you could do is tactical bullish signal right into tomorrow. You see selling in the financials. You like the financials, they're close enough. Take a shot on a trade with the financials. You know what I mean? That's the extent of it. I wouldn't start again legging into financials here without an official bull signal yet, and you still got heat in other places. But the financials, they're doing their thing. They're part of the correction out there, right? Some of the studs out there look good. You know what looks good? Morgan Stanley is a stud. Like this thing has caught some nice flow this year. And it doesn't look bad. It's just, it might be, even if it doesn't go lower, it might be stuck for a bit until we get what we want. You understand? Could be stuck here. But for a trade, I can't blame you one bit. LRCX. That's what's look at it. Unbelievable. Unbelievable. This thing bucked to the highs today. You gotta be kidding me. Jesus Murphy. These things are beasts. They just, they don't want to sell these things. Cyclicals, they just, the cyclical semis look better. The cyclical semis look better. But other cyclical names look like crap. Yeah, that's a good point, M options. A lot of people were looking at the Meltup. That's the problem. And, we've come a long way. Meltup, the word's thrown around loosely. But honestly, I don't even want to catch my tongue, right? It wouldn't shock me. We reverse and go higher from here. It wouldn't shock me one bit. It honestly wouldn't shock me one bit. Okay? Exactly. I think the higher probability out there is that this doesn't turn into an all-out correction and we get it end of January, February next year. That's why I thought we would grind higher into the holidays, But, look, that's the beauty of the market. That's why it's so hard to forecast anything. Look at what just happened in a couple days. Whether it's engineered, right? If it just people created out of thin air or it's legit, it doesn't matter. You have an actual flare-up of COVID that people are concerned about, right? That's all that people care. Are they concerned enough where you're going to get lockdowns across the globe, slow down economically? Okay. And then you had yesterday's rally because the saving grace was, Powell's not rated. He's not going to taper into this. And then you got Powell all of a sudden today decides, I'm going to be hawkish for whatever reason. Now you just took two major pillars of the Meltup out of the equation, right? You took them right out, just like that. Poof. Yeah, that's why we could come in, Matt, and by the next webinar next week, we could be saying, oh my God, the Omicron, whatever the hell the name of that COVID is gone, doesn't even exist anymore. And Powell's concerned about the economy and is delaying taper. And then you got Tiom, right? That's what we're in right now. So again, goes back to the point. That's why I think there's no reason for us to take time off. I mean, if you want to spend the holidays with your family, take time off anyway. But I'm saying for market conditions, there's no reason to turn off the screen. We could still pay attention and participate and try to make money. We just want to be more disciplined about it, considering where we are and the risk out there. If this, honestly, if this melt up continued, okay, and we're going into Christmas and you tell me now, maybe I want to take some time off, I agree with you 100%, but now that you've got a little bit of volatility here, you don't want to take time off. You might have some decent opportunities that come out of here for trades. You know what's funny? Every time I take a holiday, I feel like I missed the market for 6 years. You know, I'm turning on the machines in the hotels. Holidays, I hung up my cleats. In my prime, I've taken enough holidays for a lifetime. You know, now if I miss a week of the market, I come back, I have no clue what's going on, I feel like. No clue. I don't even know where to start if I just walk away. You guys are crazy. No, I didn't play anything today. That's why I wrote that post on the playbook. I'm playing off the playbook exactly. So tomorrow, I'm going to look for something to get my hands on. You know, it might be just SPY again. Maybe, but I'm telling you, I have such a lack of conviction right now that it might be just SPY again like I did the last time. Yeah, again, just because of where we're at, I'm going to play it by the book. And listen, if I don't, if it's a little gap up tomorrow, whatever, I'll look to get something intraday and try to make some money that way. So I'm not looking to force it. I don't have FOMO. I told you, I'm at this point, and I've been like this for a while now. I'm content with not putting on much baggage and risk. I'm content. You guys will understand once you're in this game long enough, you're at a comfortable spot, right? Where you know your style, you know your system, you know your techniques. When you have a couple good years like we've had, especially the year of COVID, you learn not to force things here. You're okay with giving up some profits, but there's no reason to stick your neck out. It's almost like the Sharpies approach. You go, you fire, you swing the axe hard when the easy money's there. And then, like I said, I love this game. I'm a degenerate. I want to play. There's still ways we can make money. I'm not going to knock the cover off the ball. I'm not going to try to take the risk to knock the cover off the ball. Well, that's what it is, Ani. One way or the other, you're going to learn that because, like you just mentioned, you're going to take a hickey, and you're not going to enjoy that hickey. That's where I told you where I got to where I am right now. The frustration. I was just as good making money in the run as anybody else, right? Sometimes I get luckier than others, make more money, sometimes less. But a problem I had early on in my career for a stretch was getting caught and giving back too much, if not all of it. So all this work I gave back in one pullback. You know what I mean? And that's all just discipline and money management. So the beauty is you learn from your mistakes. No, just risk, Dan. So in other words, what it's corny, but it's kind of like this sums up the way I look at it. So off a correction is where, and I have my bullish signals lined up. The more I have them, the more aggressive I'll be, the more risk I'll take on. Like I told you guys, off the COVID lows, some of you were around, no, right? I had 9, 10 different positions at once. It was a little too crazy at times, okay? And then as the rally extends and we lose those signals, almost like a funnel, my risk becomes less and less and less thinner. So yeah, I could get caught up here, but I'm only giving back a small piece of all this. So it's that thesis. That thesis. Here, off the corrections, off the pullbacks, when I have the majority of signals behind me is where I get the most aggressive. And the most aggressive means not only just size, the amount of positions, etc. Exactly, Ani. Exactly. All right. The flows, timing mechanism, a stock picking mechanism, and the sentiment definitely is a measure of risk management. Yeah, I cut exposure on the way up, and any new exposure I take less, Dan, more importantly. You understand? I take less. So that's what, and I think that's what somebody mentioned the last time. He thought I was screaming at him. I wasn't screaming at him. I didn't understand what he was saying. When he mentioned that I said a couple months ago that I'm waiting for a better situation, I am. There's no way here I'm going to have as much exposure or conviction as I did coming off the COVID lows. It's just not going to happen. You know what I mean? Because I had more of my signals there, which I don't have here. So yeah, position sizing, exposure, the amount of positions, you know, because another big problem of mine wasn't even the size, because you could stop yourself out, Dan, especially with options. It was the amount of the basket of names. That was my problem. So even if I sized down, I would have a basket of names here. So I thought I was like diversified. But when the market rolled over, they all went to poof. You understand? Didn't matter whether I was diversified or not. When everything becomes correlated, exactly. So the basket would kill me. So even more importantly, you know, as the rally extends and sentiment gets further away from a bullish signal, you know, the amount of positions I take less. That's why I was telling a lot of you guys, especially newer guys, go position by position. You understand? Here, go position, but you get in something, you know, see, works out, doesn't work out, stop yourself out, take profit, next case. You know, don't start putting on positions up here. It doesn't have to happen, but if it does, you're going to pay the price, especially options. You'll pay it quick. So, but that, guys, that's all. It all comes with experience. You know what I mean? You learn from your mistakes. I told you that's a slogan of mine that I live by in this game. This game will undoubtedly teach you what you do wrong. It will scream at you what you do wrong every time. And then it's up to us to find a way to correct it. But you know, all of us will know exactly what we're doing wrong and what's getting in the way of us, you know, finding profitability. You have to take action to correct those mistakes, right? You correct those mistakes, you don't do them again. You continuously improve in this game. All right, on that note, I need a nap. I got horrible sleep. Yeah, I mean, Cash, the best thing to do, honestly, the best thing to do, oh, the indicators on here. I made a video, it was on the course, Cash. I could send you a DM or something with a couple of the main ones. I think you asked me that before too, and I didn't do it. When I get a chance, Cash, I'll give you a couple of the main ones. All right, guys, enjoy the rest of the week. Again, just be aware of the risk, play, try to make some money, right? Look for something to buy tomorrow, especially if we got some weakness for a squeeze. Take it day by day. Same to you guys. I'll see the majority of you mañana. Have a good night, everybody.